The US economy has been experiencing some major turbulence lately, but there's a glimmer of hope on the horizon. A soft landing, something that many economists have been hoping for, is now looking more and more like a possibility. Let's break down what's happening with the economy, why there's some optimism, and what this soft landing actually means for us. Spoiler, it's not as cushy as it sounds, but it's better than a hard crash. Let's first talk about what we've been seeing, the slowdown. The economy has shown signs of decelerating in recent months, but it's not all bad news. Growth has been slowing down from the high speeds we saw in the pandemic recovery phase, which is to be expected. The government's stimulus packages and pent-up demand fueled much of that growth, and now we're seeing things return to a more normal pace. But here's where it gets interesting. Despite this slowdown, the economy hasn't tipped into a recession yet, and inflation has been coming down. That's like going from a burning oven to a nice toasty oven mitt. Still hot, but manageable. This is where the term soft landing comes in. Essentially, a soft landing means the economy slows down without crashing. Think of it like trying to land a plane smoothly. It's not as exciting as a perfect takeoff, but it's certainly less dramatic than a rough crash landing. Now you might be asking, how is that even possible? Well, the Federal Reserve has been playing a huge role in this delicate balancing act. By raising interest rates, the Fed has been trying to cool off the economy. Interest rate hikes are like turning down the thermostat when things get too hot, slowing down consumer spending, reducing borrowing, and keeping inflation under control. But the thing is, the Fed doesn't want to cause a full-blown recession. They want to control inflation without destroying the job market or causing economic chaos. It's like trying to drive a car and keep it from stalling while also avoiding hitting any pedestrians. It's tough, but not impossible. So the question becomes, can the US avoid the dreaded R word, recession? The answer is a little murky. There's a lot of uncertainty in the air. Consumer spending is still strong, unemployment is low, and businesses are investing in the future. But let's be real. There's a big question mark hanging over the economy. What happens if the Fed raises rates too much? Or what if global events, like a geopolitical crisis or supply chain disruption, throw us off course? It's a lot to keep track of, but one thing's clear. The US economy is navigating a very tricky path. But here's the silver lining. If the economy can manage to achieve a soft landing, it would mean that the economic slowdown doesn't lead to massive job losses or a steep drop in economic activity. That's what we all want, right? A slowdown without the extreme consequences. Instead of spiraling into a deep recession, the economy would slowly adjust to more sustainable growth, allowing businesses to thrive, people to keep their jobs, and inflation to remain under control. Sounds pretty good, right? Now let's get into why the US might actually pull off this soft landing. First, the job market is strong. Unemployment rates have remained low, and there's still demand for workers in many industries. People are spending money, and businesses are hiring. That's a good sign that the economy isn't in free fall, even if things are slowing down. Second, inflation is coming down. After hitting a 40-year high, inflation has been steadily decreasing, thanks in part to those interest rate hikes. Prices are still high on some things, like groceries and gas, but overall, inflation is much more manageable than it was a year ago. This means that consumers are feeling less squeezed by rising prices, which gives them a little more breathing room. Third, the global economic situation is stabilizing. While there are always risks, like geopolitical tensions and trade disruptions, the global economy has been adjusting to the post-pandemic reality. This has led to more stable supply chains, which helps keep inflation in check. Global demand for goods and services is steady, and while the international market has its ups and downs, it's not a major threat to the US economy at the moment. But we can't ignore the risks. There are still a lot of uncertainties on the horizon. For one, the Fed's rate hikes could eventually tip the economy into recession if they go too far. Higher interest rates are great for controlling inflation, but they also make borrowing more expensive. If people stop borrowing, businesses stop investing, and that can slow things down even more. Plus, global events like wars, natural disasters, or even another pandemic could throw the economy off course. If you learned something new today, or even if you just enjoyed the ride, don't forget to like, share, and subscribe. We're here to help you stay on top of the latest trends and events. Thanks for watching.